Hello, hello. Good morning. Welcome to another ES Futures Trading stream. This is Victor streaming from Atlanta. It, Today is Tuesday, December 5th. It is 8:52 a.m. Eastern Time in the US. All right. Dum, 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 dum. Okay, what do we have here? What do we have here? Now, as usual, it is very important to do homework. You know, it can be very tedious, very annoying sometimes, but this has to happen. This is something has to happen. Notice that there is something interesting happening here. I have just drawn a trend line monthly. You know, these crazy things can happen. You know, just look at this. I got this big range, right? The market has a breakout of this range, check it back, come back inside. It didn't take this level here. I think this is important. And now we have a 5-month range now with the high, excess high here. But the monthly is kind of it's a little bit different than the weekly and daily, but still there has no excess here. We do have excess now, but notice what this trend line is. It's just so too perfect again. 1, 2, 3, 4, 5, 6, 7 here. The level that I have here, this 45, and I got this is interesting to me because this level here is 4,500. If you remember, the 4,500 is super. It was a level that was traded multiple times. There's a lot of volume trading around that area. Now this contract has only 2 more weeks to go. I think we are actually we are. All right, the rollover has started. We have. Let's check. What is it? Do I have a calendar? Monthly calendar. Oops, what the heck? Monthly calendar. Okay, come on. I don't wanna buy. I just wanna. Come, is there? God damn it. Okay, this is, oh boy. Well, the idea, check your calendars. This contract expires the 19th. So this week and the next week is pretty much a rollover period. Somewhere, maybe Friday this week, and someday during the next week. Usually there's one day that has, huge volume when the rollover happens. Right now, the increase it's not that noticeable yet, but there is some change happening. This is the data from the CME. Notice this is March contract. Yesterday we have 35,000. How much do we have on Friday? 25. Thursday, 14. Wednesday, 8,000. Tuesday, 7,000. So you can see there is an increase here. All right, but there will be one day that this is going to be, if not as much as the current contract, sometimes it can double. We never know how that happens. When that happens, I mean, I can see here happening, but I will know just after the fact, right? So what I'm trying to say, there's some weird things that can happen here. Uh, if I check, because what I do is I record these numbers. Let's check what is 1785 What is a saddle? 4576.50 4572.50. Okay. The volume has been very low. No, not very low. This day was very low here, very low volume here. And it started to increase. It's increasing here. Okay, never mind about that. But it's just something that I want to remember. Okay, this week and the other, we will have some events there. The weekly, again, this trend line here. Yesterday we were talking about this yesterday. We had this trend line, what? And it was amazing how the market was bought here, not exactly in the trend line. It's becoming very mechanical now, very mechanical. The same thing that happens. That happened here. What it was? This is the daily time frame here, right? This is the daily that happened here. Now it's happening in this area, but in the week, in the bigger time frame, which is something different now. Bigger time frame, that's something that also show us that what happens to traders, to small traders, can also happen to bigger ones. It happens in all time frames. Bigger money, bigger capital can also get caught short. They can also be forced to liquidate. We never know what. The thing is, we never know when that happens. Now, I have extended this trend line, and it's surprising how, if I want to follow this, the next one, the next reference is just this one, right? Somehow around this level, which is the next level to monitor for upside continuation. But the risk here remains extremely high. You got 1, 2, 3, 4, 5. There's a lot of trading around the 46.50, right? Around the 4600 here, close to this high, and the 4600 has been cleared. But notice, now this is the next contract. Notice where this contract is already. This contract is the new one, okay? When the rollover starts, if the market keeps doing this, where do you think? This is just information, market generated information, right? This market is being bought from this level. Now we have a range. Now we have a range, quite like a 6 to 8 day range in the daily time frame, and all the buying, or most of the buying, is coming from this level, which happens to be the 4600. This level has been cleared. This chart doesn't reflect that, right? Because this is a non-adjusted contract. But when the rollover happens, when Tuesday night we have the new contract, or maybe Monday, traders will start to trade the new contract. Retail, suddenly the market will see a jump. Instead of opening here, will be way up here. Way up here. These are just technicalities, right? But people don't, you won't believe how people don't realize that. They would think that, the market has a big gap or whatever. And suddenly all the references they have will not be valid. or so they will think. All right. Now, this, what is happening now? We have, I was watching this market on yesterday. How this was a sequential trade. I have non-access here, non-access here, weak level, and the trade of this kind of potential trades here. The trade actually is the opposite side. Once the one side is taken, the trade is the opposite side. And the trade was just down to here, but it has really good extension in the overnight. Now we have short inventory here. The market deal with some in the morning. There was a counteraction to overnight inventory, some counteraction to overnight inventory, but value at the end remained lower. The market did not move value inside previous day value area. Now, yesterday the same thing happened. We have a non-access high here, non-access low here. The same thing, the same thing that happened here, the same thing happened yesterday as well. What happened to value yesterday? Value was lower, and the trade is to the downside. When you have, this is not a rule, but if I am going to trade something, I am going to have better odds if I trade in the direction of developing value, and value was developing lower. Prices were going higher, but value was lower. All right? If the market opens down here, in the same way how this trade was completed here, this one is already completed, just opening down here. There's nothing else to see here. My focus here is at least my yearly focus right now, or at the opening, would be this formation here, what I have here. This level here. Look at this level here. I got this level here multiple times being bought here. 1, 2, 3, 1, 2, 3. I'm going to count only these two. I can count this one as well. 1, 2, 3, 4, 5 times. Now we have 5, 6, 7, 8 times. This level, this low or this area is very weak. And also it's very important from the trading point of view, because this is a breakout. I still have this I am still checking or taking this area. All the what's happening here is coming from this breakout here. I got the breakout of an inside bar. And particularly this inside bar is quite interesting, because this day actually closed all the distributions we had the previous day. Which is a sign that all the buying that was here actually wasn't that serious, right? And now multiple times the market has come back not just inside this range, inside the 2-day range, but inside the inside bar. Each time is penetrating deeper and deeper, right? When the market gets out of the range and comes back inside, the opposite side becomes the destination trade. And this market is having, it's just, the thing here, the context here is the rollover, right? Who will be interested in buying here, right? It is end of the year as well. It's end of the year, end of the quarter. Soon, just 2 weeks after the rollover ends, we will have end of the month, end of the week. There's a lot of things that can happen here. I am trying to be very careful here. Yesterday, for example, I got a short bias, okay? I got a short bias. That was because this long inventory here, the long here. There was liquidation on that long, but it did not have continuation. When this weak low was taken, was corrected, the market just didn't have it, and we were talking about that. When the market took this low out, no, it just didn't have it. In the same way as this, the opening, okay, did not have continuation because the next thing the market needs to do for upside continuation was closing this distribution. It just didn't happen. The next thing down here was this low here, and it didn't have it. You can see it dying here. You know? And I don't expect, okay, I don't expect something big to happen, or at least if there's no any kind of catalytic, any kind of news that just comes. I expect some sideways trading here. Now, how many days this sideways trading is going on, right? We have 1, 2, 3, 4, 5, 6, 7. Somewhere within 7 or 9 days. And this is and I say this because of observation, right? Somewhere within that time frame, 7 to 9 days, there's a resolution of a range. It's either a breakout to the upside, to the downside, or breakout, look above on failure, or look below on failure. Once that happens, I want to see downside continuation or upside extension. I don't have anything today, right? My main focus, okay, or at least what I think I will be focusing here. I have this market that is selling from this level. Right? Look above, come back, look above, took the 4600 out and come back inside. Multiple times the market has come back inside this range, but it doesn't have acceptance. There's no acceptance above, no acceptance below. It's just right there forming another range here. Now, if I check my charts, what these things look like, right? I have something here. I have another thing here. And before that, it is just crazy here. The weakness of this market, is crazy. But remember, something that I also keep in mind is that sometimes something needs to happen. Now we have this one as well. All right. Another thing is, this is another piece of information, right? This is market generated information. One piece of information that's the bigger time frame now is to the upside. We have one time frame high, and this market can come all the way down to here, and still be an upside market in the bigger time frame. Unless this low is taken, this is still an upside market. This is the bigger. This is the monthly. I am seeing some sign of weakness in the weekly as well. You have 1, 2, 3, 4, 5, 6 weeks straight to the upside and range. All time frames are doing different. These two are doing the same, but this one is in range. Now, for the market to put all these time frames in sync, this time frame needs to resume the trend to the upside. But you looked how weak this will be if something like that happens. Now, this week we have what can bring volatility to the market. We have the employment situation. Today we have 9:45 and 10 a.m. Tomorrow we have ADP, which is related to this one as well. This also is related to this event, but this is the weekly jobless claim. Okay, we have 1, 2, 3, 4 weeks, and each week we have jobless claim, and this is from previous month. In this case, is November. All right, November here. Consumer sentiment also on Friday. But whatever happened here, especially if there is some big movements to the upside, I will doubt that, the odds of those kind of movements being retraced, I think that are quite high. I don't think anybody would like to, to get those contracts, to keep these contracts, the year's contracts, to the close. Remember, we are just 2 weeks to the close. Now I am going to keep I'm going to open my news. There's not too much to see for me right now. I am watching. Just a second. I've been opening some. Okay. Overnight inventory is 100% short here. Traders do what works until it doesn't work anymore. What happened yesterday? They're trying to replicate what happened yesterday today. I'm taking a screenshot of this. Screen. Yeah, that's a part of my homework. Right? Overnight inventory is 100% short. What I mean with that is yesterday all this inventory plus today's inventory are in the market. What's the direction of this inventory? Low, right? Who is holding this inventory? Who is holding the shorts here? Right? Ask yourself that question. Who is holding the shorts? That's one thing. That is just one piece of information. This low here, we have multiple lows here, 2 or 3 lows here. This level is particularly weak. The charts don't reflect that, or at least the market profile charts. If I have my market profile just like that, I don't see that quite clear. But if I open these profiles, that's what I will see. I think there's a range here, It's just it can be seen here, right? High here. Bought from this level as well. Was bought here. Sold from this level. Can you see? This level, this is an important level here. I don't want to call it like 45.80, but the area, right? The area here. I guess What can I do here? What can I do? What can I do? What is E? And this is E again. Where is E? Where is E? Alright. I'm gonna open those things. Where's last 4572? This is not 4572. The other one is E as well. E as well. Okay. Just to show, right? The activity that's happening around this area here. There's a breakout. This is the breakout of this 2 day. This inside day here. And this level is clearly being used as a resistance, support, call it whatever, right? Next thing may happen is the market just tries to take this level, and the selling can come just before this, or buying can come. The market can take this level back again, and buying can come here. It can happen in the intraday, or could be the daily time frame. What time is it? It is 9:18 here, and that's why I have this red, marks here. Significant trading that happened here as well. I want to highlight this, but not to be too obvious, because it becomes very distracting. There's lots of retail or short-term, I don't want to call it retail, short-term trading going on here. And short-term trading, one of the characteristics of short-term trading is this very emotional, very rational. There's a lot, market tends to get too short or too long, too fast. And now what's happening, crude, there was a meeting, the OPEC meeting, I guess yesterday or a couple of days ago, when they decided that they were going to increase cuts. They are going from 1 million to 2 millions, and this market just keep going lower. Dollar is kind of, I don't know if this is I cannot call it a trend yet. Gold has made a high, an all-time high. The characteristic of this one, when we open the intraday, we see the high was made in the overnight. This is good for the market. Bonds are rallying now. This is what I was talking. This high made in the overnight, I don't like that. If this high was made in daily time frame, in regular trading hours, this would be better. But I think the market can come back to check this one. And the market traders become nervous when gold is rallying along with stocks. With stocks, it's not a good sign. That's what they say. Some good rebalancing of what happened with crude. Inventory was balanced. And inside it, market open with a gap. No, market did not open. Market opening inside previous day range, look below, and now has come back inside. This movement, targets this up, targets the high. Okay, I don't trade crude. Weekly here. All right. Now